Very narrow price action continues today. Small loss, minus 1,050 on the 250K portfolio, less than 0.5%. And 50K portfolio minus 370, down on the week, down on the month. We are up on the quarter just a little bit, not much, about 0.5% on the quarter, up on the year, and hypothetical end of day drawdown minus 30K, 30.3K. Same thing, about minus 30.3K on the live end of day drawdown. Drawdown is the distance from our last equity peak, and so just extreme chop, extreme random price action, just a bad joke almost, this price action, the way this market trades in narrow ranges, and just a real lack of any sort of direction or tone or you look at the price action during the day, and I continue to watch it. I study the markets all the time. I've been a student of the market for years, and I continue to learn about the markets, but this price action is hard to find. It's hard to find anything that would really work. Scalping, it's more of a scalper's market, and so not a huge fan of scalping. And the market just seems to be waiting for the debt ceiling resolution. I've noticed a huge drop in the average daily range. This is just the average range over the last 6 days. You see 34 points is the average range, and you can see just how narrow the S&P is over the 1, 2, 3, 4, 5, 6, 7 trading days. Our last equity peak for trading was right here on May the 5th, and then we just endured a very directionless, extremely directionless market, off the charts as far as the amount of lack of direction in narrow range than we've seen. We haven't seen this kind of price action in a while. Just the highest high minus the lowest low within that range. You see narrow ranges here, but it's kind of moving up. Same thing here, it's moving up. And you see a sideways price action here, but it's a bigger range, and so pretty extreme. Let's look at it on a weekly basis, and you can see really a big drop off in the point value going all the way back to 2021, September 2021. You see 85 points, average weekly range over the last 6 weeks, 1, 2, 3, 4, 5, 6. And I guess we're 7 weeks into this quarter. So I just updated the indicator to go 7 weeks back, because 7 weeks will represent the quarter. Now, if we count this week, it's only 2 days in, so it's not a full week yet. But if we count the current week as one of the 7 weeks, just a massive precipitous drop in range since the end of March. You can just see it's just dying out. The market ranges are dying out. It's one of the quickest drops we've seen in a while. 2022, the ranges were elevated. All of 2022 flattened out. 2023, and then just dropped. It's just dropped here to the 2021 levels. And so just one of the quickest drops, though. We saw a quick drop here, but it was from a higher level. An even quicker drop here, but from an even higher range level. But seeing a drop this quick from this level, we haven't seen that in a while, pre-pandemic. And so let's look at the trades on the day. Not a lot of trades. Cobra 3 hit its profit target on the short side, plus 575. Gap fill, can't even get a $500 profit target because the ranges are so narrow. Stopped out, minus 725. Opening chop, up a little bit on the day, plus 225. And then mirror, minus 525. And so I anticipated a gap up today. We didn't get it. We did get a surge at the open, especially in the NASDAQ. You can see the price action here at the open. Let's zoom in a little bit. And so you had a surge at the open, but then the market ended up, the close of the day ends up being the close of the first 15-minute bar. Lots of overlap, very narrow ranges, not a lot of price movement, really. And so EVP1 had a short trade here, and then a short trade at the end of the day, down on the day about minus 705. and tick count trend minus 625, minus 100 on momentum reversal, and then zigzag plus 675. And so not a lot of trades, just very small, just very narrow ranges, small price action, limited trade. So one of our smaller down days, and so trying to get the momentum going in our direction. Risk about 2,000 tomorrow. That's about the distance from our worst case close trade drawdown. And yeah, so we're just managing our risk at this point, waiting for a bounce at the drawdown. If we don't get the market moving in our direction quickly tomorrow, within about $2,000 of risk, we are going to stop and then look to limit our trades to less trades or pause for a while. Wait for this market to potentially break out of this extremely narrow range that we see right here and potentially have an increase in the VIX as well. You see the VIX, even when it pops, it only pops from 17 to 18, which is not much. And so we need a little more price action for our current setup. Otherwise, we'll have to revise it for a different type of market if this persists. So those are the trades on the day for Tuesday, May the 16th, 2020.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.